So Labour have delivered their first budget in 14 years, and it's the first budget I've seen where a Chancellor of the Exchequer gets up and actually tells us what property investment strategy we should be following over the next few years. For that and more, stay tuned. So if you want to stay ahead in the property investing game, make sure you subscribe to this channel. We put out 3 videos each and every week, all dedicated to keeping you on top of your game. Like and comment, tell me what you think of some of the views I'll be sharing with you in this video. This is the first Labour budget in 14 years. She's looking to raise £40 billion, the largest tax-raising budget in 30 years. There's quite a lot there, and there's quite a lot that's going to make a big difference for you guys if you're a property investor or developer or running any kind of business. So this £40 billion she's looking to raise, it looks as though the bulk of that is going to be borne by employers, so she thinks. It's a tax on jobs. All businesses are going to have to be paying 15% employers' national insurance contributions, and the threshold at which employers' contributions start to be paid is falling from £9,000 to £5,000. When you couple that with the rise in minimum wage is going up by more than 6%, 3 times the amount of inflation, so it's going up to £12.21p. And by the way, that actually puts UK's minimum wage at the highest level of all the G7 nations. So it looks as though she's looking to raise a lot of this £40 billion from employers, but this is just going to have an effect on growth and employment in the economy. Obviously, it's going to feed into inflation, into costs of goods and services, and it's also going to mean that people will be thinking twice about their hiring decisions. What I'm finding more and more is that many small businesses like ours are increasingly outsourcing services to other countries. So if you have an admin assistant or some people doing some property management for you, they will not be sitting necessarily in an office in the UK with all these employment costs. They'll be sitting somewhere else in the Philippines. And what with AI, that trend is only going to accelerate. And I'm not sure whether the government have fully cottoned on to that. Now, generally speaking, it seems that the government want to raise a ton of tax to basically shove it into big, grandiose, government-funded infrastructure type projects, some of which are of dubious value. There is, of course, the famed carbon capture scheme, which they're putting £22 billion of our money into that. Carbon capture, I thought that was just planting a few trees. But let's move on to what is being said about property. There was a lot of fear in the run-up to this budget about what is likely to happen to capital gains tax, and many property investors thought about selling privately held property ahead of this budget to avoid a massive rise in that area. Now, I think what the government have done is basically they have done a lot of kite flying. And I think this has been a big mistake. They've just leaked ideas in the run-up to this budget, and they've seen and tested what the reaction to those ideas is likely to be. And if they've got a lot of pushback, they've had a change of mind. Now, there was talk about equalising capital gains tax rates with income tax rates. I think they've saw sense on that, and that's good news. Particularly with regards to property assets, there is no increase in CGT on the sale of properties which you own in your own name. So for low rate taxpayers, that's 18%. For high rate taxpayers, that's 24%. They have increased CGT on other assets, such as shares in your company or something like that. They've gone from 10 to 18% for basic rate taxpayers and 20 to 24%. So that's a bit of a sigh of relief. Now, if you're liking this video, of course, smash that like button. Tell me what you think about what this budget is actually going to do in terms of encouraging that growth that the Chancellor so badly wants. Now, let's look more at the situation for property investors and developers. Now, I've never seen a budget like this where a Chancellor has pretty much practically told you guys what property investing strategy you should follow. In particular, she's hit stamp duty and land tax, SDLT, for property investors buying properties to rent out, residential properties to rent out. Now, of course, when you buy a property to rent out, you pay SDLT, but if you're buying a property to rent out, there's what's known as an additional stamp duty charge. Now, this was previously 3%. Now it's increased from 3% to 5%. you're going to have to think very carefully about whether residential buy-to-let property investment actually makes sense, especially when you consider there is no change to the current SDLT regime on commercial property transactions. Now, this is the thing that Rachel Reeves is basically saying. If you are buying a residential property to let out at £500,000, under the new regime, you will be paying £37,500 in SDLT. That is a lot of money. Now, if you are buying a commercial property or a mixed-use commercial and residential property for £500,000, you will pay just £14,500 in SDLT. So what's Rachel Reeves saying? She's saying, look, you know, you buy residential stuff, I'm going to clobber you. You buy a commercial property, a mixed-use property, perhaps a shop with a flat above which you're going to let out, or perhaps a small office building which you're going to convert into flats. Well, that stamp duty is going to be less than half the equivalent stamp duty if that transaction was wholly residential. Now, we cover a lot on commercial property buy-to-let, commercial property conversions to residential use on this channel. If you want to stay updated with how we're going to use these SDLT regime to our advantage, then make sure you subscribe, hit the bell icon for more. There was also a hint, but no real detail, about Rachel Reeves' plans for planning reform. She keeps saying she wants to do it, but she hasn't actually spelled out yet what shape or form that's going to take. But we can hope that's good news. We'll have to wait and see what that all entails. And again, for commercial property investors, she's announced some interesting measures on business rates. And this is particularly for businesses in the retail and hospitality and leisure industries. So this is going to be very good news if you're doing commercial property buy-to-let. Because if you're doing commercial property buy-to-let, of course, when you buy the thing, the stamp duty is cheaper, less than half than what it would be if you're buying a residential property for the same value. And of course, with these extra measures on business rates, a small business renting that property from you will get some nice little advantages there in terms of the business rates they will have to pay. More on these business rates changes in a future video. All in all, Rachel Reeves has delivered a budget which hasn't spooked the market. In fact, the FTSE 250 rose during her budget speech, and 10-year gilts went down a little bit straight afterwards. Which means that the markets have a little bit of confidence in what she's saying about balancing the books and all that kind of stuff, and government borrowing has just got a little bit cheaper. Of course, was there a big shocker in this budget? Yes, there was. The big shocker is, of course, for private jet owners, an extra levy of £450 per passenger on a private jet landing on these shores. Now, on that bombshell, that wraps up this budget roundup. Not bad news for property investors. No rise in CGT for personally held properties when you sell them. And also, very good news for commercial property people, particularly with commercial stamp duty rates remaining as they've been for a long time, which is much cheaper than residential rates. And good news for business rates for your tenants of commercial properties as well. That's it for now. Let me know what you think of the budget in the comments below. See you guys next time. The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.